What's up guys, welcome back on YouTube. So today I'm gonna be doing something I have never done before, and that has been requested a lot by members and also some of you on some comments and throughout time, is how do you trade very volatile event, and precisely how do you trade something like NFP. So before we get into trading NFP, this is something I've rarely traded before. This is something I traded very early in my trading career, and I've lost money when I tried to trade it seriously, and then I tried to find loophole to use the volatility. It worked, it didn't work. Long story short, I ended up not trading NFP ever, and even staying away from the NFP day and the day before on the market. But recently, for the past few months, I've been trading back news event, and as such, stuff like an NFP. Why? Because the volatility has been a lot more not predictable, but easier to ride. So with news like this, there's two ways of trading an event like NFP. And it's easier to place yourself before the news or to ride the momentum. To place yourself before the news, you have to have a good insight of the market and kind of a bias toward it. So for example, if we are looking at, so right now we're looking at S&P. S&P is on the previous level that didn't provide much, so it's actually on a break retest level that failed. If you're looking at back in time, let me get this level from before. I think it's from the weekly. Yes, so it's that massive rejection level there. It didn't provide anything there. We are actually on the retest, and if we're looking at the daily, it's kind of support area, but the next level, meaningful level, will be around there. Not here to do a technical analysis, just explain where we are. So in terms of US dollar strength, we currently have some downside on the stock market, which could be strengthening the US dollar. Okay, so that's the first thing we're gonna look at. Now, let me pull up the calendar. We're looking at the news. So it's in an hour. So we're just doing the prep work here. We're looking at what it's looking like. So quickly through the figure, doesn't seem like a much difference. It's slightly down, but not so much. This is the same. We kind of more or less expecting the same result so far. The only thing you can pay attention to is that the average hourly earnings seems to be going down. Now we are in inflation current environment. The inflation is going down, yes, but it's still quite high. So the last thing you want to see is earnings going down. It means people are making less from their wage, and they're struggling to afford the living. So pay attention to this figure today, because if it was to be even lower than this and everything is the same, it'll be quite negative for the US dollar. But at the minute, the way it is, it doesn't seem like a much kind of eventful news, because everything seems to be pretty much the same. So you have to put it into the context of the current week and situation. This week we've had a fair few news US dollar related, but nothing has been giving a driver to the market as such that there is no highly positive or highly negative news, and hasn't been for a while. The last FOMC meeting was kind of non-event. Nobody is basically coming up and saying this is like this, and this is creating a bullish reaction on the market or negative reaction on the market. Everybody's trying to be very careful about the word they're choosing, so that they don't influence the market. So the market is actually looking strongly for a driver. What that means is that any out of expectation data here is going to be driving the market crazy. I mean, if it's a really bad data, the market will short US dollar quite hard, and same if it's the other way around. And this will be enhanced by the fact that we are on low liquidity environment, because it's the month of August and a lot of traders are out as such, like most people, and therefore it's increasing the volatility factor on highly popular event, because a lot less money is in the market, and as such, a bigger position in the market will move the market a lot more. I hope it makes sense, but this is what low liquidity environment do basically. So now let me check what we are going to be looking at. I'm going to pull up the gold chart. This is it. So this is what when I trade an event, US dollar related, the only thing I'm trading is gold. So now we're gonna look at the metal market and see if there is a potential trade we can take from this one. This is purely technical at this point. I'm not including any fundamental, and this will come later. We still have an hour to come, and we've got time to prepare, and I've got time to break down the full scenario for you guys. So from a technical point of view, we are currently trading, so all of these have worked out. These were actual trade I shared with our community trading floor guys. So these worked out, and pretty much for me, the technical aspect of this zone has already delivered, okay? So I'm not in, this is the difference I was saying, you've got two ways of trading the news. Place yourself before the news, or wait and ride the momentum. This is a situation where I can't place myself anymore in the situation because it worked. My technical area worked, and I would not use it again with a fundamental at stake coming. So now, if we were to stay around here and have very negative news, then this zone that provided a pullback technically it adds a reason for people to buy into. Now, if you add on top of it the fundamental driver, even though the technical already delivered, people will be pushing gold quite hard. And as such, we would see upside. If we have to see upside from around there, where could this go? And how do you trade the momentum? So basically, to trade the momentum, you need the space to do so. What do I mean by this? If I'm looking at the 4 hours, if the news was to spike the price there around here, obviously you'll have to look at the factor, is it still worth entering the momentum, knowing that we've moved already 200 pips? And this is why it's messing most traders out there. They do not have a proper plan when they do. And other traders think trading this is actually gambling, when you can actually, this is why I'm making this video, you can trade with a proper plan this type of event. So, but you need to prepare for the event and all case scenario. If you're looking at this, two things should be jumping out. This is an area that could cause struggle. On 4 hours, there's the EMA, but I will not pay attention to it. And then potentially this one. So one is 130 pips away, and one is almost 200 pips away. So if I was to put these two levels, it's not technical analysis, I'm just briefly showing you what could potentially make our price struggle to keep going with the momentum, because that's what we're trying to ride. We're trying to ride the momentum. Obviously, you not try to jump into a trade if the momentum is dead. And I mean, if you're getting into a zone when you know there will be a retracement, that pullback will slow down. What would you want to enter past that? Because it's clearly saying that you've got a lot of potential to have lost that momentum. So this is what you need to assess prior to the trade. And as such, go back to daily, because I only trade daily. I don't trade lower time frame than daily. You can actually trade from 4 hours, 1 hour, whatever, but I want the bigger picture. I'm focusing on the bigger picture. People that tend to trade lower time frame lose sight of the bigger picture, and then that's how they get burnt in trading. You could be caught in slight momentum, slight upside on short time frame, thinking, oh yeah, this is good. And then if you forget the big picture, you realize actually there's no more room for upside, and you're just being stubborn on the short time frame because it looks like there is, but there isn't on the bigger time frame. So I stick to the daily. On this, I'm gonna draw, so this is not a buy area, by the way, this is just the area where we're at. So imagine this is where we are from the news. What are the possible scenario for this trade? Well, you've got upside downside, or it's a non-event. So first insight, we had ADP on Thursday. It's a similar type of figure that gives you a kind of heads up of what's possibly coming later on. And this was clearly as expected and created as such a non-event. So for once, NFP could really be a non-event and have the same type of figures that we have seen on ADP. However, it's rarely the case with NFP. So as such, let's prepare a potential buy or sell rather than sideways, because sideways doesn't interest us for a trade. In the event of remember, we emphasize on the fact there's no driver, so any out of expectation could trigger a market response. So let's say we've got a bad data, which bad for the US dollar, see gold upside. On the gold upside, we've seen that depending on how far the factor is out of expectation, there's two levels to be reached. This one, pretty easy to reach, and this one. I think all eyes should be on this one to be the minimum one to be reached. Why? Because you see the recent downside, we're between 38 and 50. If you have to take the fib all the way up, which depending on how you trade with the fib, this is clearly your 38. So this on bad data would be reached. Now the point I'm trying to make is how do you ride that momentum? For me, it'd be worth entering any price below this one, any price. And that's how you ride the momentum. Because if it's out of expectation, it's highly likely going to reach the 1950. And as such, any price in the first half of your trade would make sense because you are looking at a potential one-to-one risk-reward ratio, which is always good to have, even though it doesn't matter. But it still makes sense to jump in something that's still got potential. If you enter at worst around here, it still has around 100 pips to give. And that's simply how I would look at it. I would do the same thing for the downside case scenario. But now the downside case scenario look a lot better, which means I have a preference for seeing upside on NFP and seeing US dollar strength. Why? Because now if you're looking at the downside, there is nothing technically there. And that means there is a lot less reason for the price to slow down once we build up momentum, which is US dollar positive, so negative for gold. And as such, you could easily think that we would reach the 1900 target by the end of the day, if it was out of expectation. The main one will be the 1925 psychological area. But past that, it's free fall basically. We could have a reaction from there, and if we were to be very safe, we would take this as the target and look at half of it, and therefore, if you're looking at half of it, do exactly the same thing. Past this, it becomes less interesting to ride the momentum. But if you are anywhere in this to enter the market, even though it moves big initially, then you can dive into the market. I will not go into more depth for now to ride the momentum post one of these prices, because we do have another way of trading it, which is riding the 38 momentum trade, but this is a bit more complex for this simple video. But this is what it looked like from a momentum point of view. Now, what we can look at is if we technically have something that tend to give us a heads up of where this could be going. So we've seen that, if we put back the chart, S&P looks like to be having some sort of support, so could be seeing some upside. First, so upside mean US dollar potential weakness. If you look at silver, silver is again on an area where we could see technically further upside. That goes with US dollar weakness. So from a technical point of view, it looks like we could be seeing upside. But because it looks like we could be seeing upside, if we get upside, it helps you having this heads up. But if we get downside, it means that all these levels you have are going to be breached. And if they all breach, the momentum will be stronger. So it looks like we could be having upside from a technical point of view, but if we get downside, it's gonna be harder and stronger momentum. So this is how you prepare for NFP. So I will join back a few minutes just before the news, and we're gonna see if we can apply whatever the result is, what I've just talked about, and just try to get into a trade and ride it all the way. So we catch up in a few minutes, guys.
Few moments later.
Alright guys, so we are about to get into the news now. So what I'm gonna be using my phone to enter buy sell because it's pre-planned. Got 5 lots, so nothing crazy, just to show you if there's something to ride. And yeah, it makes things easier. It's a bit faster. Sometimes the platform lags on the computer, sometimes it freezes, and I found it easier and faster. So it's all about that edge. So we keep calm and we wait for the news. We don't dive into it, even though we see spike. Don't try to ride it straight away, because sometimes it tends to do a spike liquidity grab and go the other way around on weird results. So we just wait and see what the data is actually. Oh, all right, so it's mixed data. Okay, so mixed data. So on something like this, I don't do anything. So it's a soft reading, slightly better, but I think market wants it a lot better. So you see, we haven't cleared the psychological level there. So I think what's gonna happen now, most likely, we're gonna see tech resuming, and the tech was strong for the upside, so slightly more upside. What you could be looking at is riding the other type of momentum. So I'm not gonna take a trade on this. I can put the phone away. Just gonna show you guys what I mean by what you could be looking at there is the momentum we've made, 900, so around 100 pips. It's just see if you get a retracement of this move toward the 38, and maybe jump into it. But that is more experience, more advanced. On result like this, I prefer not to enter the trade, because the market is could be looking for any reason to just go one way or the other. So for me, the data is not strong enough to break all the key aspects we had. You remember we were looking for more upside than downside actually. And as such, I don't think we've got enough momentum with a mixed result. Mixed result is like there's some good and there's some bad. So it's like kind of neutral in a way the market interpret this. So I think we're resuming the tech, and because we're on strong buy area, strong potential upside area, I think we're gonna resume the upside, but not with momentum. That's the main thing. So I can't ride the momentum. So if I was into a buy, I'd keep the buy, but I'm not into a buy because I didn't have a bias before the news. Even though the tech was telling me maybe upside, I was waiting for fundamentals. So I think what we're gonna see now is a retest of this area, most likely this area there. If we break it, maybe we're gonna go all the way there at some point, but I can't see anything. So what I see coming is we're gonna get stuck in this now area. So let me be a bit clearer. We're gonna go back toward this level, pushed, and we're gonna have a range in between until next week we see some more direction for the market, basically. So it's a non-event. It happened. I wanted to show you how to ride the momentum, but the plan and the preparation remains the same. And keep your head cool. Do not jump into anything. You know, you could have jumped on the wick down and think it's the momentum, but actually you need to take the time to read the news. You have plenty of time, as I was saying. If there was momentum, this was our upper limit, this was our lower limit. Until you've reached them, you still have plenty of time to just dive into the trade and ride along the momentum, which we do not have. All right, so I hope it's helpful to get some news trading and to be a bit more prepared for it. And we catch up on the next video, guys. Thanks for watching, guys. Don't forget to comment, like, and subscribe.